Welcome traders to our practical application for the bearish engulfing. Important is that you watched already the theory about the bearish engulfing, and now we'll talk about option number one, enter option number 1, 2, and 3. I hope you screenshotted, you have a screenshot of these 3 slides. That's very helpful, right? Should you're a beginner, then it's very helpful to have the slides on your side. Yeah, should be easier. Guys, open it, all right? Open the slide number 1. I mean here, the bearish engulfing, take action, option number 1. And the idea here is to sell a bearish engulfing, okay? And the idea is, okay, should have nothing to the right, for example, okay, and then we open gold, and then we see, oh, we saw this huge red candle. And then we have to check number 1, bearish engulfing, key takeaways must be met. Okay, what are the key takeaways? It is a position. Okay, we will start with a position. Open the slide, guys. We talked a lot about it, and a slide has to be in the higher high or the lower high. If we start to count here the trend, it's a high. It's let's draw this one low, drop, lower high, lower low, lower high, lower low, and this drop. This could be a lower low, right? A lower high, sorry, a lower high, and that's okay. Position met, that's fine. Number 2, lows and highs must be engulfed on the same level or higher than the previous candle and closes lower than previous low. This is a high, that's a high from the previous candle, definitely higher, boom, perfect. And number 2 is a close. This is a close from the bearish engulfing, should lower or must lower than the low from the previous low, okay? Or must closes lower than the previous low, okay? The close here is important to the previous candle low. It's different, right? A low is here. This is here the low, and this is a close. Should this a red candle, right? Means bearish engulfing close has to be lower than the previous candle low, and it is definitely lower. Perfect. Lows and highs also align. Number 3 is the structure. Bearish engulfing candle completely engulfs the entire range of the first one, including the wicks, and closes lower than the previous low. It's a line, right? Number 4 is selling action. Okay, we want a short here. Okay, good. Let's go back to the slide with option number 1. Point 1 is done. All key takeaways met. Number 2, as soon as a bearish engulfing is completed in its respective time frame, it means, okay, for example, today, not for example, today is Friday, right? Oh, that's not a F. Okay, it's Friday here, and it is around noon in Dubai. It means we have to wait. Okay, it's not completed, or we have to wait. For example, for the weekly, we have to wait for the Monday. Okay, for Monday opening, that is important. The reason is why, for example, you check this already, it's noon, okay? Oh, nice, we have a nice low, but we need a close, okay? We need the close lower than the previous candle low. Means, okay, it's noon, we have a couple of hours for the market, also US opening at 4:30 p.m. Means maybe we will get super strength the next 3 hours, and you will close here. Then we have not bearish engulfing. Okay, that means wait for Monday on a weekly, on the daily chart, wait for the next day, right? On a 240 minutes chart, wait for the next 4 hours. Always like this, always wait for the new candle. Yeah, let's mark our lows and highs. Snap mode. Very quick. 0, 1. Okay, that means here, right? This is our sorry. This is our low. That's our high. And now the entry, option number 1, short order is set slightly lower than the low to avoid possible fake outs. That means, okay? Sorry. Means the low is 1,981.2. Means the low, the entry short is 1,981.1. Okay, for example, minimum is this one. Okay, minimum, this number here. Of course, we're talking about slightly lower. Okay, slightly lower. That means, okay, we will use the horizontal line here, for example, and like this. Okay, that's fine. Or here, right, up to you. It's not right, not wrong. Right, 1,976.3 here. Okay, this would be our entry color, green. And then our stop loss is set with a respective distance, plus 33%. Let me add this. 33, I have no 33s. 33, red, boom. Oops. Okay. Now it is 33%. Yes. It is the whole range. The stop loss is here above. That means, okay, important is this candle here. Okay, we get the drop, closes here, lowest here. Next day we will get more here. That's the next day, right? Second plus. What is this? What is this? Okay. Right, next day, look, we got the opening was here. We moved higher, a gap up. Okay, it means our entry never filled. We moved higher, not filled, not filled, not filled. And then we got weakness. Boom. Okay, we are filled here. Short order 1,976.3. Got a little bit lower the whole week. Okay, and then the next week we got more strengths. Okay, we are in losses. Then we are in profits again. Losses, not break even. Losses again, and then profits, profits, profits. Okay, that was the beginning of profits here. Look at this red candle, red candle, red candle. Great, great, great. We are not talking about, we will not talk about trade management, right? It is the same like a clear supply order, for example. We got a drop here, it's up to you. If you move your stop loss to break even, if you take profits here, right? Also with the seasonality, that's up to you. End of the day, yeah, we come back into the zone and then another drop. But that is option number 1. Okay, let's talk about option number 2.1. Key takeaways align, bearish engulfing high and low is the same. And now the entry from option number 2 is a little bit different. A little bit different, right? Upsala. Clear. 1, 2. So that means, guys, this is our bearish engulfing candle, and we will move our entry. Okay. We're talking about, okay, the zone from the low to the high. I don't want to play. I don't want to trade option number one. Okay, it is my zone is so big, make not really sense for me in terms of profit margin. I want to decrease my zone and increase my profit margin. It means we will wait for an re-enter, not for re-enter, for a correction back into, for a retracement back into the bearish engulfing, and then we will short. And that means, if we check this one here, you see, we got a correction, right? We got, I talk about these candles here. Means we don't know, we never know, right? You can set your entry, for example, here, okay, in the last part of this, and maybe you will never fill, and here you never filled, okay? Then, okay, say 50%, around here, maybe 50%, my size on my zone is only 50%, then it's also fine. Should we filled? No, we are not filled, okay, with 50% here. Later, yes, that's up to you, but not on 50%. Here, this around area here, the first part around, if we split this to 3 parts, maybe that's a part of the first part, we're filled with this candles. Means, okay, I'll go here with this entry, that's fine, I increased my profit margin, okay, why not? That is possible. That is fine here in the first part. Okay, I decreased my zone a little bit. I increased my profit margin. It's fine. You can set this area, right? If you want here, anyway, your entry, maybe you're not filled. That's a part of the game, guys. Or you can also mark it, right? For example, okay, you will wait. You have an eye on it. It's a weekly chart every day, right? You will check this, and then, or every week, up to you. And then, oh, okay, look, the close is here, right? That's fine. We are definitely deeper in the zone. Okay, market short, and then definitely still stop loss here above. It's not necessary to have 33% of the whole area. For example, your entry is here. Okay, that was the close of this candle. Then your stop loss is also a little bit lower, not 33% of the full area. Okay, it depends on this, on your entry, right? Always your entry and the distal line. That is option number 2. And now we'll talk about the last option, that is option number 3. And it is a little bit tricky, right? It's always the same. This one is a little bit tricky. Yeah, we have to use the zone refinement. We have to go into lower time frame. That means the whole area here is too big for us. Profit margin less because the zone is too big. We don't want to go with option number 1, too big. Option number 2, also not nice. We don't know, right, how deep we come back into this area. Also not, we are looking for option number 3. That means lower time frame. And here there's the weekly chart. It's not right or wrong to go in the daily, to go in the 60-minute, 5-minute, 1 minute, up to you, right? The same rules. Here I found that our job is to find a nice lower time frame supply area into this bearish engulfing candle. Okay, and I found something on the 60-minute chart. Go to the 60 minutes. Okay. I already marked the this is the bearish engulfing. Okay. The whole area from 2126 to 1978. This is the bearish engulfing from here to here, the weekly bearish engulfing. Our job is to find supply from here to here. Okay, that is also where is high quality supply. Also supply, if we create later, is also fine. And I found something, guys. I found something here. Upsala. We come deep into the bearish engulfing again, right? We have no supply to the left, but we created this rally-based drop, very powerful, right? And this could be our lower time frame entry, lower time frame entry. It's high quality supply. It is super high, right? It's really, really high. And then let's check if we are filled or not. Not filled. And here, guys, we are filled. This is a little bit later. We come back into this area in our lower time frame, 60-minute supply area. And the 60-minute part is a part of the weekly bearish engulfing. It's okay. Entries, of course, are the proximal line, right? 2110.9. Stop loss is 33% or maybe 10% here. That's fine. That depends on your stop loss. Okay, all good. Means, okay, we hit the zone, and our zone at the beginning was huge, right? No profit margin. And here with the super small zone, we have a 1, 2, 3, 4, 5, 6, 7, 8, 9, definitely 10, 15, 20 hours, huh? Definitely 20 hours. That's how to use option number 3. And that's it, guys. It was the theory, the practical application, option number 1, 2, and also 3. Nothing, not really different to the hanging man, for example, right? The options are always the same. Next week, I will try to be done also and to upload also another price action pattern. Maybe next week, should not definitely the next week. Okay, then the week after, definitely. Okay, should you have any questions, please, guys, write me a message. That's fine, or join, of course, the blueprint at the blueprint beginner breakout room. Join there. Okay, happy trading, guys. Bye bye.